Welcome back. Let's take another look at some movers. Shares of Dell up about 12%, and that's after the company reported strong results for the first quarter, driven by strong demand in enterprise computing, software, and healthy sales of PCs. And Julie, I just want to talk about Michael Dell because he's a happy guy this week. He's getting a nice price for his VMware shares. He owns 40% of the company, but also Dell, not a bad showing here, up 12%.
Yeah, not a bad showing. And I haven't looked lately at how much of Dell he still owns, his namesake company here, so I'm going to call that up real quick. It looks like he owns about 2% still of Dell as well. So sitting pretty on two fronts here this week. So sales up 16% in the quarter for Dell to just over $26 billion. $25 billion is what analysts had been projecting. And the company saw strong demand in particular for commercial PCs. That was up by 22%. It's a high grossing product for Dell. And obviously the margin's decent on that one too. So what's interesting about this to me is, we're hearing a lot of companies talk about belt tightening, talking about slowing down in hiring, trying to cut expenses. But at least it looks like in the PC cycle for now, that hasn't been happening as much on the commercial front. What's also interesting about that is if we're talking about pullback from the office, you would think there wouldn't need as many computers. On the flip side, if you, like me, had your laptop at home for a few years and it became outdated, then at some point the company is going to update that laptop. So, maybe there's some of that happening as well.
Well, along those lines, I buy a new PC about once every 2 to 3 years. And so I bought this. I happened to buy this huge HP laptop right before the pandemic, and it kind of came in handy. And 2 years later, so recently, I bought a PC. It's something that just sits in my living room, and it's very powerful, and I love it. So I think there are reasons that, using my anecdotal results of me, that people are going out and still buying stuff. I think people tightening their belts. There is an inflation. I don't know if you're going to get substitution effects here, but I guess maybe they're using their cards for 12 years now. Prosupermanian has been, maybe people are just going to stick with the computer a little bit longer, even as it slows. But I think people are mobile now so much that as long as they have the nice new phone, the new iPhone, or maybe a year old, they don't need that much PC power.
Maybe not, but the companies, I guess, their employers still do. Let's talk about some other tech movers that we're watching today. Zscaler is another company out with its numbers, security software in this case. Those shares are also up 9.6%. Its results beat estimates. It also raised its forecast. And basically, they're seeing broad-based demand despite what is happening on the macro front here. Piper Sandler writing in a note to investors that billings decelerated, which was expected, but they didn't decelerate as much as analysts had been projecting. And there were solid trends. Here's another thing that echoes what we heard from Dell. Solid trends across large enterprise customers and federal and overall demand. So that's interesting here. Again, this idea,
well, that's government money.
If you do think about the big tech companies that have disappointed, most of them have been consumer-facing, not enterprise-facing. Although there's certainly, like Snowflake, there have been some notable disappointments on the enterprise front.
Well, I mean, that's what Brian Sozzi was interviewing Chuck Robbins yesterday, CEO of Cisco, and he made the distinction, we're business to business, we're B2B. We don't have the same issues that other companies do that are consumer facing. I just want to show the Wi-Fi Interactive here. I have our software heat map up for the day. Zscaler is up in the upper left, and we'll take a look at a year-to-date chart down 51%. And this was a high flyer during the pandemic. Lots of excitement about the cloud, and a lot of the shine has come off there. You take a smaller company like Nutanix, I don't know if they're on here, but they actually, they just had a disaster earnings this week. So some of the smaller players here may be coming up back a little bit. Let me show you the 5-day look. I've seen some software and chip excitement this week, a little bit of money flowing in there. VMware, the biggest gainer because of the takeover we were talking about. Zoom up 18%. So maybe the beginning of a comeback here.
Maybe, but there's one that's not coming back today also. That's Workday, which you have on there.
Yes.
That company disappointed. So obviously the enterprise story is not clear sort of across the board because Workday is an enterprise software maker as well. That company's numbers missed estimates. First quarter earnings, 83 cents, missing by 2 pennies a share. Revenue rose 22%. That was in line with estimates. And subscription revenue, which is really the most important source for Workday, was up by 23% here. So that disappointing investors, and those shares are down about 7% here. So it's not, there is definitely not sort of a monolithic story here, no matter where you look.
The waters are murky.
Yes.
On every single front, the waters are murky. There you go. Glad we solved that. There you go.